Greetings, history enthusiasts. Welcome back to the HIST-A.I RY channel. Today, we're embarking on a captivating journey into the history of banking, exploring its evolution from ancient practices to the digital transactions of today. Join us as we unveil the fascinating story behind an institution that plays a crucial role in our everyday lives. In the Fertile Crescent of Mesopotamia, the seeds of banking were first sown. This is where our journey begins, in an era where civilization itself was in its infancy. At the heart of these ancient societies was the concept of trade, and with it, the need for a system to manage and record these transactions. The earliest form of banking can be traced back to these bustling trade hubs of the ancient world. In the sun-baked lands of Mesopotamia, around the 4th millennium before the Common Era, clay tablets were used as a means of recording financial transactions. These weren't just ordinary pieces of clay, but a testament to human ingenuity, bearing the imprints of the earliest form of writing, cuneiform. These tablets served as the first ledgers, recording the exchange of goods and services, loans, and even interest rates. But who were the custodians of these primitive ledgers? Enter the Tomkaram, or the early moneylenders. These were the individuals who facilitated trade by lending silver and barley, the common currencies of the time. Their role was crucial in bridging the gap between merchants and consumers, ensuring the flow of goods and services across the kingdom. They were the forerunners of modern bankers, managing wealth and enabling commerce. These early banking practices were not limited to Mesopotamia. The principle of lending and borrowing, the cornerstone of modern banking, echoed across different ancient cultures. From the Egyptian grain banks to the moneylenders of ancient India, the basic banking functions had begun to take shape. So, as we stand on the shoulders of these ancient moneylenders, we realize that banking is not just about numbers and transactions. It is a system intricately woven into the fabric of human civilization, enabling us to trade and prosper. It is a testament to our ability to innovate, adapt, and evolve. Thus, the foundation of banking was laid, paving the way for future financial explorations. As we peel back the layers of history, we'll find that the roots of banking run deep, shaping the course of human history, from the clay tablets of ancient Mesopotamia to the digital transactions of today. As we journey into the Middle Ages, banking takes a new turn in the flourishing Italian city-states. As the Middle Ages dawned, the banking landscape was irrevocably altered by the rise of city-states such as Florence and Venice. These bustling hubs of commerce and culture became the cradle of modern banking practices, driven by influential banking families like the Medici. The Medici family, in particular, left an indelible mark on the world of finance. Their bank, established in the early 15th century, was a powerhouse that dictated economic policies across Italy and beyond. But their influence wasn't just confined to the world of banking. The Medicis were avid patrons of the arts and sciences, their wealth and patronage fueling the Renaissance and paving the way for luminaries like Leonardo da Vinci and Galileo Galilei. However, it wasn't just the rise of powerful banking families that characterized this era. The Middle Ages also saw the establishment of critical banking concepts that we still use today. Bills of exchange, for example, became a common method of payment. This practice allowed merchants to avoid carrying large amounts of cash during long, often dangerous journeys. Instead, they would obtain a bill from a banker in their hometown and exchange it for cash upon reaching their destination. Similarly, the concept of letters of credit emerged during this period. These documents served as a promise from a bank to honor payments made by a client, providing a security net for transactions. This innovation played a key role in facilitating international trade, bridging the gap between distant buyers and sellers. These developments in the banking sector were not just a result of economic necessity, but also a reflection of the intellectual and cultural awakening that was sweeping through Europe at the time. Banking, in essence, became a cornerstone of this transformation, driving economic growth and enabling cultural exchange. The Middle Ages, thus, witnessed a significant transformation in banking. Across the seas, in the vast expanse of Asia, banking was taking its own unique form. As the millennia rolled by, This continent of diversity and innovation played host to some of the most fascinating evolutions in the world of finance. In the heart of the East, the Chinese were pioneers of an early form of banking, utilizing a type of credit instrument known as fake yuan, or flying money. This system, established during the Tang dynasty around the 7th century, was a form of promissory note that facilitated the transfer of wealth without the need for physical coins. Similarly, the Indians were not far behind in their financial innovations. The hundis, an indigenous financial instrument, was used extensively for trade and credit transactions. This age-old system, dating back to the Mauryan Empire in the 3rd century BC, was a testament to the ingenuity of early Asian banking. Yet, the Oriental tale of banking would be incomplete without a look towards the Islamic world. Here, banking was not just a matter of finance, but of faith. Islamic banking, guided by the principles of Sharia law, introduced the world to a unique financial model rooted in ethical practices. Under this system, riba, or interest, was prohibited, leading to the development of profit and loss sharing arrangements. This was a revolutionary concept that fundamentally altered the dynamics of banking, emphasizing risk sharing and ethical investment. Islamic scholars also played a pivotal role in the evolution of this system. They introduced financial instruments such as sukuk, akin to bonds, and takaful, a form of Islamic insurance. These innovations have had a profound impact on the global financial landscape, shaping the way we understand and practice banking today. Thus, banking in Asia and the Islamic world evolved, with its own unique characteristics and principles. This fascinating journey from ancient tables to digital transactions is a testament to the human ingenuity and the ceaseless quest for economic progress. As we enter the Renaissance era, the birth of modern banking is imminent. The 15th century was a transformative period in the world of finance. With the rise of trade and commerce, the need for a more structured and reliable banking system became evident. In the heart of Tuscany, Italy, in 1472, an institution emerged that would etch its name in the annals of banking history. This was none other than Banca Monte dei Paschi di Siena, which holds the honor of being the oldest surviving bank in the world. Originally created to grant loans to the needy at a fair and reasonable interest rate, Banca Monte dei Paschi di Siena was a pioneer in establishing trust and reliability as the cornerstone of banking. But the birth of modern banking was not confined to the establishment of enduring institutions. It was also characterized by the development and refinement of concepts that would become the bedrock of banking systems across the globe. Central to these was the idea of central banking. The 17th and 18th centuries witnessed the rise of central banking concepts primarily in Europe. These institutions, such as the Bank of England established in 1694, were not merely banks in the traditional sense. They were given the power to issue currency, regulate the supply of money, and serve as the lender of last resort. These central banks played a pivotal role in stabilizing economies, controlling inflation, and managing the country's money supply. Moreover, the development of banking systems during this period was crucial. It led to the diversification of banking services, including the issuance of banknotes, the acceptance of deposits, and the lending of money. These developments provided the foundation for the modern banking system, characterized by a complex yet efficient network of financial institutions. This period marked the birth of modern banking as we know it today. It was an era of significant advancements, pioneering institutions, and innovative concepts that have shaped and defined the way we transact, save, invest, and think about money. The roots of modern banking are deeply embedded in this transformative period, a testament to the enduring legacy of the Renaissance era. The winds of the Industrial Revolution brought about significant changes in the banking landscape. As the 19th century dawned, the world saw an unprecedented wave of industrialization. This evolution brought about a demand for a new kind of banking, commercial banking. As industry and commerce expanded, the need for capital grew exponentially. The answer? Commercial banks, stepping in to fuel the fires of industry with the necessary capital. These banks played a crucial role in the financing of industrial ventures. They provided loans to burgeoning industries, facilitating the growth of railroads, factories, and mines. among others. It was a symbiotic relationship, with industries prospering from the financial support and banks flourishing alongside their industrial partners. But the influence of commercial banks extended beyond the realms of industry. They began to offer a wider range of services, making banking more accessible to the broader public. No longer was banking the exclusive domain of the wealthy elite. Instead, it was becoming a service that could be accessed by anyone, from the small-scale entrepreneur to the factory worker saving for the future. Yet, this period of growth and expansion was not without its challenges. The banking sector, like any other, was not immune to the ebb and flow of the economy. Economic fluctuations brought about periods of banking crises, with banks facing the risk of insolvency during economic downturns. The banking sector had to adapt and evolve, developing mechanisms to weather these economic storms. The Industrial Revolution wasn't just about steam engines and factories. It was a period that reshaped the world in countless ways, and banking was no exception. From the rise of commercial banks to the expansion of banking services to the wider public, the influence of this period on banking is undeniable. With the Industrial Revolution, banking took a significant leap forward. It transformed from a system serving the privileged few to an essential service accessible to many, playing a pivotal role in the economic development of nations. It was a period of growth, innovation, and resilience, setting the stage for the banking landscape as we know it today. The Roaring '20s came to a screeching halt, and the banking world faced its biggest crisis yet. The Great Depression, a decade-long period of economic downturn beginning in 1929, presented unprecedented challenges to the banking sector. Banks across the globe found themselves in a precarious position as economies crumbled, businesses folded, and unemployment soared. Banks were not just victims of these difficult times, they were also part of the problem. Speculative investments, reckless lending, and lack of proper supervision led to a massive banking crisis. Thousands of banks failed, unable to recover loans or meet the demands of panicked depositors rushing to withdraw their savings. This widespread bank failure amplified the economic downturn, as it led to a severe contraction of credit and a sharp decline in money supply. But, as it often happens, crisis also became a catalyst for change. The Great Depression highlighted the need for substantial reforms in the banking sector. In the United States, the Glass-Steagall Act of 1933 was introduced as a response to the banking crisis. This act established a separation between commercial and investment banking activities, aiming to prevent the kind of risky speculation that had contributed to the Depression. Furthermore, to restore confidence in the banking system and protect depositors, the Federal Deposit Insurance Corporation, or the FDIC, was created. This agency provided insurance on deposits, guaranteeing the safety of depositors' money even if a bank were to fail. This was a groundbreaking move, as it significantly reduced the risk of bank runs, where depositors rushed to withdraw their money out of fear of the bank's insolvency. Central banks, too, took on a more proactive role in managing monetary policy during crises. They became the lenders of last resort, stepping in to provide liquidity to struggling banks and stabilizing the financial system during periods of stress. The Great Depression brought about significant changes and reforms in the banking sector. It was a painful lesson learned, but one that shaped the future of banking, highlighting the importance of prudent management, effective regulation, and adequate depositor protection. As we step into the 21st century, banking is on the brink of a digital revolution. This revolution is fueled by remarkable technological advancements that have transformed the way we handle money and conduct financial transactions. The digital age has reshaped the banking landscape, bringing about the rise of digital banking. Digital banking is a product of our interconnected world. It is the application of technology to ensure seamless, real-time financial transactions. It is banking made easy, accessible, and convenient. No longer do we need to stand in long queues at the bank or fill out extensive paperwork. The world of banking is now at our fingertips, available 24 hours a day, 7 days a week. The impact of financial technology, or fintech, on traditional banking has been profound. Fintech is the innovative use of technology in the design and delivery of financial services. It's the engine driving the digital revolution in banking. Online banking, one of the earliest manifestations of fintech, allows customers to conduct financial transactions via the internet on their computers or mobile devices. It has made banking services more accessible and transactions faster and more efficient. Mobile payments, another fintech innovation, have taken convenience to another level. Whether it's paying for a cup of coffee or transferring money to a friend, transactions can be completed in a matter of seconds using a smartphone. Then there's blockchain technology, a groundbreaking innovation that underpins cryptocurrencies like Bitcoin. Blockchain offers a secure and transparent way to record transactions, and its potential applications in banking are vast, from facilitating international money transfers to preventing fraud. However, the digitization of financial services also presents new challenges. Cybersecurity risks, the digital divide, and regulatory issues are all hurdles that need to be addressed as we navigate this digital revolution. Yet, the opportunities are immense. Digital banking can increase financial inclusion, reduce costs, and drive economic growth. It's an exciting time for banking, a sector that's been around for millennia, as it adapts to the demands of the digital age. The advent of digital banking has transformed the way we perceive and interact with financial institutions. And as we venture further into the 21st century, we can only expect this transformation to continue. Today, banking is more interconnected and complex than ever before. As we traverse the intricate web of global finance, we encounter multinational banking institutions operating at an unprecedented scale. These behemoths not only provide a wide array of financial services, but also play a crucial role in shaping the world's economy. The global banking landscape is a complex tapestry, woven together by countless financial systems. These systems, though geographically disparate, are inextricably linked, with the ripple effects of economic decisions reverberating around the globe. This interconnectedness underscores the significance of robust regulatory frameworks. These frameworks ensure stability, promote transparency, and mitigate the risks associated with financial malpractices. From the clay tablets of ancient Mesopotamia to the digital transactions of today, banking has evolved into an intricate, global network of financial institutions, systems, and regulations. As we continue to navigate through the complex world of banking, we remain curious about what the future holds. And there you have it, a sweeping journey through the history of banking, from ancient times to the digital age. If you found this exploration enlightening, don't forget to like, subscribe, share, and hit the notification bell to stay updated on our latest historical narratives here on the HIST-A.I RY channel. Thanks for joining us. Signing off.